you know, how did he come to that conclusion? And I thought it was a great question. So I thought it's something that you might all get benefit from. So I suppose the easiest one to follow is actually the ECB one. So one of the sites I kind of put in there was the ECB watch, and they actually presented a lot easier to you, and I'll explain the Fed one now in a second. But the ECB one here, you can see we're talking about the June meeting here. They're saying there's only a 17% chance of the rates being at 2%. The current rate is already 2%, but there's an 83% chance of it going to 2.25. So you can see the probabilities of a rate hike in June are very, very high. Okay. If you click on the July one here, you can see actually now there's pretty much a 90% chance of it being at least 2.25 and nearly a 50% chance of another rate hike in July. Okay. And then if you get to September, you're pretty much, you know, it's banked in that we'll have had at least 2 rate hikes by then. So that's one way of doing it there through the ECB. So that's monitoring the ECB kind of interest rate cycle. Okay. The other one is the Fed Watch tool, and you get this on the CME group, that link that I showed you here. So this is called the federal funds rate. Okay. And again, you can go out into different time frames on this, but right now, the federal funds rate, I think, is at about 3.63% in and around that, the current one right now at this moment in time, okay? But let's say you went out to January. Again, it's giving you kind of the probabilities of where that's likely to be. So as you can see, the probability of it actually being less than where it is now is less than 2%. Pretty much the market, the majority of Fed commentators are suggesting it'll be currently where it's at now, and maybe leaning towards a rate hike actually up into this 375-400 range. Okay, so they're two very simple ones. You can go out over different periods of time. You know, you could go out to, I don't know, October, what's it going to be, and you can get different ideas. And these are just tools based on that constantly change. It's never fixed. So, you know, these data points would have changed after this week with the kind of inflation data coming in hotter than expected. So obviously the probabilities of rate cuts would have been reduced, and the probability of rate hikes, or at least rates staying stagnant, increased, if that makes sense. So there's two very easy sites to follow if you want to try and follow, well, what's the current thinking as where rates are going into the future. And it's another piece of evidence for you when you're making your investment decisions. So a great question from Ronan, and I just thought it was worth sharing with everybody there. Okay.
Thanks for that.
Yeah. If you have any questions, just shoot. If you don't understand it, just let me know. The other thing I wanted to just mention to you is just in terms of joining this meeting from now on, if you just go to members area here in Equity Scan, you can click on join towards the meeting from here. It's also in the knowledge base. There's a link from the knowledge base as well. So if you ever mislaid the email or whatever, just easy ways, just log into the members area, you get access there too. So
Stephen,
yeah,
sorry, Philip here. What about previous recordings of the meetings? I was looking for a few of them there and I couldn't quite locate it.
You have to log in first of all, so they're protected. So some of this content is free to see. So if you go into the weekly briefing here from the knowledge base.
Got it. Yeah. Knowledge base. That's it. Yeah.
Yeah, you will see the 2026 video recordings and summaries there. So if you click on that, and let's say obviously the one I just did on Monday is there, you'll just click on that link. Now, if you're not logged in, you won't see that. It will look empty to you. So you need to log into the members area to actually see this. Is that okay?
Great, got it. Yeah, thanks, Stephen.
No problem at all. No problem at all. Okay, so I'm going to get onto the S&P now in a minute. I don't think I need to spell it out. New all-time highs again yesterday. But what I was really I just want to kind of go through each sector at the moment and show you what's really responsible for this. And if you look at the return in technology since the March 30th lows, the technology sector is up 40%. You know, so when you start going through all the other sectors here, so consumer discretionary up 12%, obviously nowhere near as good as technology. Industrials 11, basic materials 11, utilities are actually down, energy's down, communication services, which by the way Google is included in this, so if you actually stripped Alphabet out, that wouldn't be doing as well as 9%. Energy's down, financials up only 6%, consumer staples only up 4%. There your must-have goods, and healthcare is pretty much neutral as well. So the point I'm trying to make here is that the rally is predominantly technology focused. I'm sure you knew that anyway. So you can look at this in two ways. And I want you to really, really listen to what I'm saying here, because a person with a bullish bias will say that's actually a very, very good thing, because those sectors haven't really participated yet in this rally. And when they do, it'll actually bring the market to new highs again. More negative-sided bearish investors will say, actually, this is not a broad-based rally. When technology decides to take a breather, this market's going to come down. So, you can look at it in two different ways. And the big thing is, will the rest of those sectors participate? So what I find really interesting in all of those sectors, if you look at energy, with oil prices, it's really interesting to see the energy sector is actually down 7-8% here. And that's not even from the peak that it was at. If you looked at the peak here, it's actually down closer to 10. So again, it's a classic case of that the market price is in advance expected future profits. But what you can see from this is the market is clearly saying to you here, we don't think energy prices are going to remain high for long. That's what the returns in that sector. And again, of course, all this run up is already baked it in. And I think you're going to see something similar here with technology. The run up is significant. At some point in time, we take a breather here. And I think that the market corrects with that. I just wanted to point out, looking at your sector analysis as well can be quite important. And that Cisco, it's up 15% in pre-market, had blowout earnings last night. So all these technology companies are having fantastic earnings. The majority of them are. So the fears over AI in a lot of them have proven unfounded. And actually, they're finding the spend that those companies have made have actually delivered efficiencies. And the demand is not going anywhere. So just wanted to point that out to you. We spoke about that 6-7 months ago. We were talking about technology being cheap at that stage, that a lot of this was overblown, and you're seeing that right here and now, and the earnings are supporting it. So this rally in the S&P 500 is being driven by technology stocks and earnings reports. So again, for those of you who missed Monday, stock prices, and please don't forget this, they're a reflection of expected future profits. That's what they are. So the market is pricing in now the fact that earnings this year and next year are going to be really, really strong for the majority of the S&P 500 companies. That's what's happening right now. And they're disregarding all the risks with the Middle East, oil prices, the wars, everything else that's going on. So all of that is just being discounted and forgotten about. Doesn't mean that those risks aren't there. They certainly are there. But the market is now really focused in on the fact that earnings are coming in much higher than expected. So we just wanted to give you a brief overview. So in terms of what does that mean for us, this is probably the longest period of time I've gone without writing puts on the S&P 500, but I still will not do it now. I went back over from the low here. I counted up, I think we're at nearly 85% of the time the market has been making a new high since the low. And it's never a good idea to sell puts against that backdrop. A, you're not getting paid enough insurance premium. And B, if there is a mini correction, which there usually is, you're going to be probably caught on the wrong side of it. So I'm prepared to wait and just be patient. If that means we don't get our May trade on, so be it. It's not something I want. But you have to be patient with this. You have to let the market come back to you rather than you chasing the market. And that's where you can make a significant mistake. So my own view is we will get a 2 or 3% correction at some point in time. When that is, no idea. Couldn't tell you. And I wouldn't claim to try and predict it. No sign of it happening now. And if you look at SPY and pre-market here, we're looking up 0.3%. at this moment in time. So obviously based off the back of Cisco's earnings, and if we went into the Magnificent Seven stocks, you know, we look at them all in pre-market. Apple up, Microsoft is neutral, Google pretty neutral, but look where the share price is at. Nvidia up, that's an interesting one. Nvidia are over in China at the moment, and there's some sort of news coming out of there. Now, ignore that news because it happened before and nothing came of it. I think this is just window dressing, to be quite honest with you. So looking at these stocks again, just while I'm here to mention, where do I see the value here? Nvidia's kind of made a run. We had targeted 250, 260 when it was below 200. It was a good buy. Don't think it's a good buy here. Wouldn't sell it, but it's own it. I think Meta is the stock here that I think could be our Google. So we bought Google back at 160 not so long ago. I think Meta, as we get through a number of earnings reports and they demonstrate that AI is benefiting them, I think that's, you're going to see their valuation multiples expand. So the only value I'm seeing here in these seven stocks is actually Meta and Microsoft. And then Microsoft have a bit to prove too. But I think both of them will come good. So if I was looking at individual stocks out of the Magnificent Seven, I continue to hold Alphabet, continue to hold Nvidia. But if I was looking at a fresh investment, it will be Meta and Microsoft. So I just wanted to, any questions on the S&P? So we're staying patient, guys. I know it's hard. Look at the bond yields. They made a new high, recent high. They took out this high here. Only yesterday it was. So this high here was taken out. You know, that was on the back off the inflation data, and the market just balked at it for now. But eventually that will become problematic, in my opinion, for stocks. And that's why I think there's the bond markets are now presenting a risk to the stock market, in my opinion. And that's why I'm not chasing it with short puts. Okay. If, however, we do get a 2 or a 3% correction, I would still consider a May 29 trade, but the strike will probably have to come up closer to 7,000. So, and the reason for that is our statistical analysis and probabilities are all based on 4-week cycles. We've only 2 weeks to expiry now. So let's say, for argument's sake, market sells off 3% between today and tomorrow. We don't have to go our 7% rule then out of the money. We could actually bring the strikes up higher. So if this sells off, 3% from this current level, let me show you what that'll bring you. That brings you down to literally in and around 7,200. You could probably consider writing even the 69 7,000 puts, and your statistical probabilities for a 2-week trade will still be over 90% on that. So at that moment in time, we'd probably get our 2.5%, even 3% in return if that happens. It's a big if, I know, but that's the kind of setup I'm waiting for in order to squeeze in a May trade. Now, if it doesn't happen between now and the end of May, so be it. We'll just wait and get the June trade on. So any questions or comments on that, guys?
You see a lot of risk attached to the AI trade.
No, I don't, Michael. I think it's going to get stronger.
Yeah.
I really do.
Volatility.
I think the risk is this. I think the risk is employment. I actually think, and then companies who get it wrong and don't invest properly, let's say a little bit like what's happening with Microsoft at the moment, unloved at the minute because Autopilot really isn't as good as some of the other stuff. I think, if their investment doesn't turn out, then you might get individual pockets of weakness with companies that didn't execute well. But generally speaking, I think we're only at the tip of the iceberg. I really do. Now, where I see the risk in it is actually in jobs. And I'm talking to an awful lot of people at the moment, and they're telling me there's silent cost cutting going on everywhere. Companies are getting rid of staff by changing their work from home policy, for example. Pretty much saying, right, you're back to work full time, knowing that people can't do it and hoping people just leave. So there's a lot of that going on. There is cost cutting going on in a lot of these multinationals. Google at the moment, for example, are on a cost cutting drive right now, which is incredible, really, when you think about where their share price is at. But I think that's what's coming, you know, and I think that's the risk with AI. I think it could be the loss of jobs, but right now, the jobs data isn't showing that up just yet, you know. I think somebody had their hand up and wanted to comment. Just jump in there.
Stephen, what do you think of Amazon?
Yeah, it's probably getting a little bit. I used to love it. Just give me 1 second there. Yeah, we're kind of only seeing 1 or 2% upside there. Not for us at the moment. We're well below the analyst target price, I will say that. But not for now. No, not for me, Monique. Not enough upside in it.
Okay. I pulled the trigger on Meta when we spoke on Monday.
Yeah.
So I bought in the low 600, around the 600 area. So I was looking at Amazon, and I think it has more room to run, but then I'd get your opinion first.
It could well do. I mean, it's benefited from its cloud services in a big way. There was worries about Amazon with the likes of Temu and Shein and all these guys taking some of the market share away from them on the online shopping. But the cloud services for Amazon has exploded, you know. So, yeah, you know, that's kind of more than offsetting that. I think at this moment, it's really positive. It's broke out to a new high. That's really positive. But I'm just looking from a valuation perspective right now. Not sure there's enough upside in it. Whereas I just see with Meta, when the narrative changes on Meta about their costs, their spending, their capex, I think once that happens, I think Meta's share price shoots off. So it'll be just. But look, again, you don't barrel everything into that. They mightn't execute well. You've got to bear that in the back as well. They mightn't produce as a result of their AI spending. So I'm not saying, you know, you invest accordingly, 5% max into it. But I like Meta there, and I think they will execute.
What about the Tesla share price? Do you think it's overpriced at the moment?
So the thing about Tesla, Ronan, Tesla is a play in robotics. Forget about it as a car company. Because if you were to look at this as an investment from a car manufacturer's point of view, it makes no sense. The share price shouldn't be anywhere near where it is now. It should be half, you know. But what's coming down the line with AI and robotics apparently is off the scale, and Tesla are at the forefront of all of that. They're also involved in a lot of renewable energy projects as well. So I think you've got to. Tesla is one of those you roll the dice with and you say, yeah, they're going to come good on robotics, and I'm in it early now. And so from a valuation perspective right now, based on their current business model, it's not cheap at all, it's expensive. But what will it look like in 5 to 10 years' time when they're leading the market in robotics? And I think that's what you're looking at with Tesla. So that's about doing your own research, your own homework. What do you think is coming down the tracks with them? And you're basically, I suppose, taking a bet with that, right? So if I could compare it to something else, not in the exact same space, but I think a lot of people I would speak to would agree that nuclear energy is probably going to be the way to go going forward, to supply all these data centers and everything that's coming with quantum computing, right? But none of these companies are making any money at the moment. So what you're doing is you're pretty much making a bet on something that it's going to come good into the future. The question is, which one comes good? And it's not easy. So you're looking at a company here called Nano Nuclear Energy. This thing swings by 20 to 30% every couple of weeks. And that looks on your chart like it's a very small move, right? That move from there to there is 50%. It's a huge move, and this is what these companies are doing. They don't make any money. If you were to look at their fundamentals now, you would run a million miles away from it. But what you're betting on now is, you know what, the demand for their products or services into the future are going to be so great. And I think Tesla's a little bit like that when it comes to robotics. I think somebody else wanted to jump in there, so just jump in.
Yeah, Steve, just on Tesla, what do you think Musk is going to do? There's a lot of talk about Musk merging all the companies, which would be Tesco. Now, you can't get into X
Yeah.
until the IPO comes. Is this a sideways into the lack of X, or do you think he will merge all of his companies together? You know, XAI, Tesla.
I
He
think
has so many.
I think I'd need a number of doctorates to get inside the mind of Elon Musk. I think it's a great question, and it probably makes sense. I think he's made a disaster of X. Obviously, it's not listed now, but I'd say if that was listed on the market, I would say the share price would be on the floor. You know, a lot of people don't trust it anymore. It's still used, of course, so I wonder, merging it in, I'm not so sure it's going to be a big benefit to Tesla shareholders, to be quite honest with you, unless they can turn that around somehow. It's the other stuff, the SpaceX and everything like that you're talking about there.
Yeah.
Obviously, that's gold going forward, you know.
Right.
And again, you're investing into stuff that's losing money hand over fist now, but you know, the question is, at what point in time does that become positive? So don't forget, if you go back through the history of Tesla, in 2010, Tesla was making amazing cars, wasn't making any money, didn't make any profits until about 2018, I think, 2017, 2018. But the share price kept going up because everybody believed in it, that, you know, they were going to come good. And half the analysts were ridiculing it, saying they're going to go out of business. It's only a matter of time. They can't compete with Ford and everything else. And they've proved them all wrong. So, you know, you'd have to kind of put your money on them that he'll come good. So I think the robotics and the whole SpaceX thing is a huge play. And we know robotics is certainly under the Tesla hood already. So if I was buying Tesla now, just be prepared for it to be down 20, 30%. And then in the future, you might be looking at something that's doubled or trebled from here just because of robotics. I think that's the only way you can look at it. It's a risk, you know.
Yeah, you can see there that that's the 50-day moving average has moved down across, which you'd expect that'll pull back a little bit. So on a pullback, it's a sideways bet on Musk and what he can do with the robotics and what he can do with SpaceX and whatever.
Yeah, absolutely. I think so. Just again, and thanks for pointing that out, Jerry. I just want to point out the limitations to everybody of technical analysis, right? So if you went onto Google now or any AI crowd, right, and you went, what is the deck cross in technical analysis? They'll say it's a very, very bearish sign. That's your deck cross there. That's your 50-day moving average crossing below the 200-day moving average. And it's the reason it's considered a deck cross. The recent momentum is so bad, it's bringing it way below the long-term average, right? Now, the only problem with that is, look where the low was when that happened. So actually, the indicator is pretty useless. You know, the market, the Tesla has rallied ever since. So if you were to go short on this based on a deck cross, you would have lost your backside on this. And that, again, I'm just doing this to try and highlight to people the limitations of technical analysis, and some of the stuff that people have invented and come up with is absolute garbage, in my opinion. And that's one of them. It's not reliable at all. Even look at it when it crosses on the way up buy, you know. Look at this buy signal here. Well, look, the move is pretty much done. You know, you had a little bit of upside there. So I don't buy into any of that. So I would ignore deck crosses and the golden crosses, whatever you want to call them. Don't think they've any relevance whatsoever. I think go with your traditional support and resistance. So with that in mind, Jerry, what I'd be looking at here is your parallel channel. So we drew the low here up to the low there and bring it up to the top. That's your new bullish parallel channel, right? And we're at the higher end of it. So I think there's probably a good chance of a pullback down to around 430 on Tesla. Or even to the middle ground here, which is maybe closer to 440 from where it is now. So we're certainly in a short-term bullish channel, and that's what I will play. And then if you look at the longer-term channel, or the longer term, that's a clear resistance point. So I'll just mark that red, and I'm going to change this one to green here because it is a bullish channel. Yeah. Okay, so that's what I'd be looking at. I'd be saying you're going to probably meet resistance on this at about 475, possible for a short-term pullback to about 440, 430. And then at that point in time, you make up your mind whether you're going to make a bet on robotics into the future. It's coming, guys. Basically, what I've seen of people have spoken to in this space, and with AI mixed in with it now, it's just off the scale what's coming, you know.
With the
Yeah.
way X is performing, like if he wants to float it into Tesla, you'd imagine with the way things are currently at, that Tesla would have a major pullback.
Yeah, like I'm not sure there's any benefit to Tesla as a shareholder of that happening, to be quite honest. Now, that's just my interpretation of X. Like, I don't look at anything on X. I don't trust it. It's not monitored. It's not moderated. I wonder how much advertising dollars they're actually getting, you know? So, I could be wrong on this, it's very hard to know. You're not seeing any of their numbers, and they're not publishing them. So, but based on my viewpoint, which is negative on X, and the fact that it's misinformation being posted over and over again, how much people will advertise on that, I don't know. So like at the end of the day, it's an advertising platform, and certainly we don't even consider it. So I don't know. I'm not sure it's going to be that beneficial to Tesla.
No, I would see SpaceX as being the more profitable company if it does 50% of what he has said it'll do. I mean that, and if he merges all together, robotics, SpaceX, I mean he's incredible for vertical companies where he doesn't depend on anyone. And if he was to merge all of this stuff together, I'm just wondering what's your opinion on that happening. I know it's hard to tell with him, but he does tend to try and have his own support for. Is he going for one big major company?
Yeah, like the one thing about Elon Musk on a positive note is his shareholders believe in him 100%. Like I'm not talking about the small shareholders like us. I'm talking about his big investors. They back him to the hilt. He's made them a lot of money, so the money will be there to support him if he makes a good enough case for this today. So if that's the case, I could probably see it as a net benefit to Tesla under one roof. But like there will be dilution going on. Don't forget, all the shareholders from those companies have to become shareholders of Tesla then, so there will be dilutory impacts there too. But the whole thing put together, absolutely. And SpaceX was migrated into Tesla. You'd be kind of going, wow, yeah, huge with robotics as well,
Yeah,
100%. Yeah, that was a good debate there. So, like the way I look at Tesla, guys, I know I'm comparing it to a totally different company, but NNE, if you fancy nuclear energy, small reactors, which I think is, at the moment the grids don't seem to be able to keep up with the demand. Something's going to have to be done. Something's going to have to change. I'm not sure solar is going to be the answer, or even wind energy. It'll be part of the answer. I think everything's pointing towards nuclear as a longer term play, and these small kind of mini reactors that can be built in a much smaller time frame seem to be where a lot of analysts are suggesting the answer may lie into the future. The problem is with all of them, no matter who you look at, they're all losing money hand over fist. And this is what you're getting into. Just as a big reminder to you, look at the share dilution here. The shares outstanding here in 2022 were 28 million. It's pretty much doubled. So in other words, they've diluted your shareholding over 5 years, by half. So in other words, basically you have to share the profits around, which there isn't any with more shareholders. That's a net negative for you. So just remember that. And then if you look on the debt side of things, where's the debt to equity ratio? There we are there. It's not too bad actually. The debt to equity isn't too bad whatsoever. So the debt side, I wouldn't be too worried about. It's just, this is what you're getting yourself involved with when you're in an early stage company like this that's losing money hand over fist. Expect share dilution when you go into it, you know. So, but look, Microsoft would have done that when it was a young company. Tesla would have done it. They all did it. It's not, I'm not saying that it's not, it's just par for the course. Obviously, if they're not making any profits, they have to get money from somewhere to support the business, you know. So just be aware of that.
Yeah, I'm actually in that one, Steve. I've been in and out of it quite a few times. I think Brendan probably traded that as well. I remember back we were talking about it. But there's another one there that I'm in as well. I'm down a bit on it. SMR, which is another one of those nuclear startups. Again, you know, losing money and whatever.
Yeah.
But as you say, they are a bit of a gamble. But if you're able to catch them on the move, I found I was in a bit early in a few of them, and it was hard to get the moves. You'd be up $1,000, but the problem was I was down more than $1,000 when it went up 1,000, and it can go up quite a bit. Well, I'm talking about when you put a 10,000 share into it, it can go up and down 10% in just one move.
Yeah, it's huge. Like, again, if you were to look at this chart here, Jerry, like you go, oh, there are tiny little moves there. Well, let's look how tiny the move actually is. You know,
they're not really tiny.
That's 25% over 2 weeks there, guys. You know, that's huge. So that it's not for the faint-hearted, and it's not something when you go into it, you either trade it and you kind of look to play support and resistance, and you keep doing that because it does move aggressively for you. You know, that's good news. And if you're up 5%, 10%, maybe you take your money off the table, wait for it to come back down to support. Or if you're a longer term player, just don't look at it every day because you'll do your own head in doing it the other way. You really will. You'll tear your hair out. And so, you know, long term investors, put it in and go to sleep and just leave it and keep revisiting it every couple of years. Traders, obviously, it's a different ball game. Really establish your support and resistance lines and avoid this. It's the one mistake I see people making over and over again, and people who subscribe to other people and everything like that. I'm all for broadening your knowledge, but like you see people recommending like see that downtrend. It's a clear downtrend. You have to wait for that to be over before you go into something. Now with this company, it's clearly over. It's going sideways now, so that's a nice sideways channel there. If I was an active trader, didn't mind this company, I'd be going, right, God, I could make 10 to 15% on a move on this in a very short period of time. So just to put that into perspective, yesterday's move, that candle there is 10%. That's a 10% move in one day. The day before that was an up day of 6%. That was a smaller down day. There's a 7% move. That's a 14% move in one day. So if you were to do your standard deviation on this, it'll be probably over 5% per day. So, that's what you're getting into. Just need to be aware of that.
Just on, before you leave nuclears, is there anything, there are companies in nuclears, is there anything in fuel that's interesting, or is there anything in nuclear that's interesting, or that you think is interesting?
I think it's the future, Jerry. The only question I have is, if you go back to all the companies around Microsoft's time, even Apple nearly went under once. Microsoft and Apple were pitted against each other in the 70s.
Yeah.
And Apple nearly went out of business, so the question is, which one is actually going to last? So maybe you pick a couple of them, Jerry. So let's say you were going to say, I'm going to allocate 10 or 15% of my portfolio to nuclear energy. Maybe find 5 or 6 companies doing the same thing and back 6 of them equally, rather than putting all of them one, unless you really fancy one company, for example, and you've done all your homework and you're happy with it. But I prefer you spread it out among maybe 4 or 5 different companies.
I think you're correct. I've spread out over a few companies. I mean, any one of them could just go off the radar. One of them could go up, they could go down, spread it out. But they're the reactors. I have a couple of reactor companies, which I think at least one of them should make a decent comeback on it. Could be unlucky and none of them would. But what about the fuel end of it?
You're talking about the the actual input going into it.
Well, yeah. What about the fuel? Their reactor companies. What about the fuel to supply the reactors?
Yeah, you're talking about trading futures then. So you want to be comfortable trading futures and understanding how the futures trade. You can do the ETFs that track the futures prices of uranium, for example, but it's not as easy as you think, you know. And again, you're probably better off, in my opinion, investing into the companies as such. And again, I'm just highlighting here to people, it's just a lesson in understanding what you're looking at in a company report. Look at the total common shares outstanding of the company we're looking at here now. 23 million in 2020. They've now got 323 million shares outstanding. That's nearly 16 times as many shares outstanding as they did just 6 years ago. So the shareholders who are invested here have been diluted over and over and over again throughout the years. On the debt side, let's have a look. Again, debt is not really getting to be considered here. So they seem to raise capital by just continually issuing shares. And if you look at the earnings expectations, there's no sign here whatsoever of profitability going forward. You know, just you're looking at here, negative earnings per share going forward. They don't even have an annual estimate. So that's what you're getting involved in. And when you're investing in these, always go back to Microsoft v. Apple versus whoever else was around back then. And there was a lot of companies, by the way, producing software, and they disappeared. So you just got to really do your due diligence on the companies you are looking at, or else trade them, you know. And while we're on the subject of power and energy, it's a stock we looked at ages ago for solar, and you know, look at that for a move on for solar. So the solar stocks have actually made a comeback again, which is amazing. We were kind of in it. We kind of had invested into after this run down, and we were down quite a bit for a long period of time. It made its way back up here, and it went up to 280 in the end, pulled back. I presume this is going to make another stab up at this end of things. So, you know, power and energy is a huge thing going forward. If you're looking for a team, power and energy are obviously huge going forward. And now, with what's been highlighted with the conflicts going on, energy dependence is a big issue for especially Europe. Europe have been caught badly. They've been hitting both sides. If you think about it, their over-dependence and two geographies for energy. And now they've been forced to look more inward. So I think that's all going to have an impact.
Yeah, while we're still on the nuclear, actually, I've dipped my hands into uranium mining companies. One of them is DNN, Denison Mines.
Sorry, what's the ticker?
DNN. Yeah, that's the company I did the research on. I quite like it. They just started construction of their new technology. It's called the ISR mining. So that actually brings the cost of mining uranium down very, very low. It's a new technology. So the directors, the shareholders, the board of directors, they approved the investment and they started construction, I think, in March. So that's one I like. I like UROY as well. I have my hands in there. UROY. So they just collect.
Sorry, Mike, I'll just do a little technical analysis here on this one while I'm at it. Like that's at the lower end of its bull channel there. So actually, I'm just going to have a quick look at the fundamentals here. While we're on this, and thanks for sharing that. So the target price here, we haven't tracked this, guys, right? So please be aware of this, is 35% higher. So the average market analyst is talking about 486 as a target price in this thing. If they're correct, we're at the lower end here, and the middle ground here is 407. So I'm just talking about as a potential trade. If Nanik is right, there's potentially 16% upside as a short-term potential trade. Let me just flip in very quickly to the financials. Just have a quick look at it. Okay, so they diluted their shares as well, but they did the majority of it back here, and more recently, it's been more stable. They are issuing shares, but if you look, it's only been, 14 million shares in the last 4 years as such. So it's nowhere near what's happening on the other side. I'm more interested now in forecasted earnings going forward. So this is going from losing money to being forecasted to being profitable, but not by a hell of a lot. And revenue forecasts into the future are quite substantial jumps here. So, you know, if from a technical perspective, if you were looking at a bullish channel, that's it right there, and you're at the bottom end of a bullish channel. So if you're trading that in Unique, you're in it at a good time.
Yeah, I'm actually keeping it for the long term.
Oh, you're keeping it for the long term.
Yeah,
Okay. So
yeah.
these guys, I take it these mine uranium, is it?
Yeah, they mine uranium, and yeah, I like this company quite a bit.
Okay. Very good. Yeah, I like that play. Yeah, absolutely.
Yeah, and there's
What's the
another
other one?
called Uroy, UROY. That one.
Okay. So obviously the trend is a little bit different than this one.
Mhm.
It's gone into a short-term little bullish trend here too, but it's nowhere near. It's kind of at the middle and higher end of it. So I'm just talking to people who might be thinking about investing. I'd probably hold off on this one for a little bit and let it get see that we come down to the bottom end of that channel first. What's the story with that one, Anik, while I'm looking here?
Okay, so they just collect royalties. They actually don't do mining. So
Okay.
they actually invest in these mining companies and just collect the royalties off it. So they don't have that risk, the mining risk.
Oh, very good. So they're a little bit like what's the one that do it in the medical device space? Oh, I can't remember the name. There's another company in the medical device space do the exact same thing. Or they invest into patents.
Yeah,
And,
I forgot the name of that company.
Yeah.
Yeah.
Yeah. Okay, yeah.
They've diluted the share quite a bit if you go back to the shares.
Yeah, they're still diluting quite a bit, Jerry. All right, yeah. So that's one thing to be aware of.
Yeah, I think if you look at it from a long-term picture, I think it'll be different if you look at it not as a trader's perspective, but as I'd say about 3 years down the road. 2 3 years
Okay,
down.
yeah. Certainly like that first one. Anyway, what's that one again, Monique?
Denison Mines, DNN.
Okay, I'm gonna add that to my watch list there. I'm gonna do a bit of homework on that myself.
Yeah,
I
like that. And one last play is, which I have my hands in also, is Centrus Energy, LEU.
Okay, give me 1 second. Sorry.
Sure, yeah.
LNU.
No, LEU.
Sorry, I'm going deaf at the moment.
I like the story.
Yeah. Okay. So negative side, just from a technical perspective, straight look there. That's a clear kind of downtrend there. So, and we're at the higher end. So if it was me, just now, for anyone that was thinking of this, I'd be waiting for this to go somewhere over here first. To remember what I said, avoid the down channels as best you can, because you could see something like this on this one. Just from a technical perspective, and that doesn't look like a lot, but it's half, guys. This is making huge moves. So that move from that low right up to where it is now is like 25%. So just be aware of that it's in a downtrend. Let me have a look at the financials, Monique. Fuel and services for okay, very good. The share dilution is continuing, and the debt levels, operating margins deteriorating, which is not a good sign. Yeah, they're actually profitable. The problem is, the margins are deteriorating for whatever reason, which isn't necessarily good, and they're issuing shares. And if you look at their earnings per share, now this can be a reflection of expected dilution going forward too. So if you think about it, the earnings per share reduces if there's more shares issued. So this is where you kind of look at the top line growth. So that would concern me too, this estimate here from 2027 to 2028. So I think that's why your chart is looking the way it's looking here, is that those forecasts going forward being lower than what they currently are. I think that So I would certainly just watch that one very carefully, Nanik, if I were you.
Yeah, I'm just dollar
and-
cost averaging into it, and basically, I think they just recently spent quite a bit of money on expanding their manufacturing facilities.
Okay.
And because they're one of the only ones, actually the only one in the US that actually enriches uranium.
Okay.
And because I think there's a sort of a sanction on the enriched uranium from Russia. So this probably could be a good story. Again, these are long term for me. I'm not trading these. I'm just dollar cost averaging.
Yeah, absolutely.
Just as a matter of interest, Nick, where did you get these, or how did you come across them? I know that the other ones that I had, the two nuclears, the NNE and SME, I found from reports and read up on. I mean, they're a risky company, but it sounds like you have good information on these.
Okay, so it's a mix. I find a lot of these plays on X. There's a lot of people that talk about them. I get them. Of course, I just go on Google. I search nuclear plays. I look through companies, and I don't have any newsletter or anything of that sort. But mostly it's from X and just online search. And I spend a lot of time reading through a lot of these companies. I mean, I've read through almost 50 nuclear companies. Read through all of them, and these are the ones that I like a lot.
Okay, thanks for sharing those.
Yeah,
No
fair play,
problem.
Nanik. Fair play to you.
Yeah.
Okay, guys. So just going to have a quick look at the metals there. I just repeat myself every year. So those of you who are in silver, I'd be selling now. We're right up at that resistance point. It's a good sign. There's a breakout, but we're at the higher end of a sideways range. So that's the only reason I wanted to mention it today. If it was me, I'm just saying personally myself, I'd be out. I would have been out already. Probably wouldn't have even got to here. So you would have given out to me for selling out too early, but I wouldn't be holding that. And gold, I would. I just continue to hold gold. So look, that's kind of it on the metals. And then again, I just keep mentioning to you, keep an eye on the bond yields. Look, I don't see a major correction in the market. I see a small pullback. And when I say a small pullback, like 3 to 5%, that's my best guess. When that happens, no idea. But bond yields are going to be problematic for the stock market going forward. And there's no sign, as you can see from our Fed Watch tool here, there's absolutely no indication of rate cuts at this moment in time. There may be a half a rate cut forecasted. That's it. So, my own view is keep an eye on this, and if that inflation data keeps getting hotter and hotter, I think that could provide the catalyst for the market to go down. But right now, it's solely focused on earnings, and Cisco coming out with blowout earnings is giving the market a lift today, and that's really what we're looking at. Okay, sorry, somebody wants to jump in there.
Just on bond markets, is there anything in Europe changing, or what's the bond market? Is there anything interesting in Europe percentage-wise on bonds? And that's good percentage in the US.
Yeah, no, you couldn't go near Europe now, Jerry, because they're just going to start raising rates. So you need to wait for them to raise rates. But I do think there will be an opportunity there. In my opinion, the economy that's most likely to tip into a recession as a result of the energy crisis is Europe. And I think if they raise rates twice, I think we could go into a little mini recession. And I think they're going to have to cut them just as quick as they've raised them. That would be my best guess on it. But I wouldn't be doing it now. Maybe later in the year, if they do 2 rate hikes, I think maybe there's an opportunity to trade European bonds, but not at this moment in time.
Okay.
Yeah, jump in there, whoever it is.
Just a simpler one on the TLT.
Yeah.
Would you have any fears at where the TLT is at the moment?
No.
Take an assignment if you have to on the 85, and even at this point, maybe with no impact on margin, selling the 84 out to June.
Yeah, no, if you've sold the 85 puts on TLT, Michael, I would take assignment. I wouldn't sell it, try and roll it out
Yeah.
of it. So take it, and then I would sell cover calls on it.
Yeah,
I would
yeah,
probably sell the 86 or 87 cover call.
yeah,
And the reason I'm saying take the assignment, you see this pays a dividend every single month.
yeah,
Every month, on the first of the month, you get a dividend. And it amounts to about 4 to 4.5% a year. So you're going to get your dividend, and then you're going to get your cover call income premium too, on top of that. So for me, I'd take the assignment, and I'd love that. Like, I wouldn't have an issue with someone having 50% of their portfolio on that, and actually just continually selling calls on it. You know,
Yeah,
that's actually a good strategy now.
I sold the 85 actually, and I was just thinking where it is now, take assignment, and even with no margin impact, sell the 84 again.
Yeah, I would take the assignment and just sell cover calls instead. You know,
Yeah,
now, if your portfolio isn't fully allocated to it, then you could sell more puts as well.
yeah,
No, but definitely, and like, if you think about, just look at this, go back to this and go, okay, do you know what? There's no sign, pretty much, if we go to January, the majority is pretty much maybe one rate hike in the US, maybe one. That's it. So I don't see at this moment in time bond yields spiraling. I think it's only if we get these inflation reports, you might get temporary jumps in the US bonds. Okay, I think you might get temporary, but I think it will come back down. And in the meantime, you just keep selling your cover calls on TLT and take in your 1%, 2% premium every month on top of what you're getting in as a dividend payment too.
It sounds that the premiums on the puts are probably very low, are they?
No, it's about 1%. It seems low, Brendan, right? But you're looking at an instrument that doesn't move a lot, so you have to take it into context. You know?
Yeah, that'd seem to be a no-brainer, wouldn't it?
Yeah, 100%, yeah. Let me quickly log into this trade.
I was a day late going into it, like, and I think I got around 75 for the 85 at the time.
Yeah,
And that would expire on June the 20th or May the 29th.
yeah, I like that trade. Let me look at the cover calls. I just want to assume you're assigned there. Just give me 1 second. Let this load up here. There we go. So let me.
Well, you posed another question there, that if you did take assignment on let's say the 29th, would
Yeah,
you go out beyond the 1st of July, so that you would also receive the dividend for the 1st of the month on July?
yeah, I think you'll get it. And yeah, I know what you're saying. So you get the dividend, but don't forget
You get both dividends, the June and the July, if you go beyond the.
Yeah. Like for selling cover calls, 45 days type thing. So, you're not, if you went to 64, for example, and you're assigned now, it's at 85, you wrote the 86. Look at that. You're getting what, let's say 1.1%, on top of your probably another 0.5% in income from your dividends. So on something that doesn't move a lot, you're generating over the next 60 days close to 2%,
Mm-hmm.
So I like that. And even if you're starting out now and you haven't issued puts at all on TLT, you could actually go down to the 84 level if you wanted, and you're getting 1.5% going out to July right now.
Yeah, that's I looked at that actually.
Yeah. So like, I like that trade personally myself. Having said that, we've just started to see the first evidence of higher oil prices impacting inflation, and is there more of that to come? So that's the only question mark you'll have in your head. But I do think long term, you're going to see TLT back over 90 at some stage. So in the interim, you just keep selling cover calls, and you take in your dividend payment too. So I would see it as a lower risk trade myself.
Mm-hmm. Thanks, Stephen.
No problem at all. Yeah, so that's kind of TLT. I think that's one of the better trades that's out there at the moment. As regards individual equities, Meta would be my top pick at the moment, because it's so hated at the moment. It's Now, when that recovers is anybody's guess, but I do think it will, and I think you could be looking at nearly a double from where it's at over maybe a 2 or a 3 year period. So Meta would be one for me for the longer term. And you know, I'm just talking about airlines again. I just want to keep you posted because I have a couple of people that have been tapping for information who are in the whole risk management end of it from an airline's perspective. Q4, big concerns about Q4 and hedging fuel. But I think that's more than priced into the share prices at the moment. Having said that, I think the market assumes, if you look at where the energy sector's gone, if, for example, the market was assuming energy is going to continue to climb, you wouldn't have the energy ETF coming down. So the market, I think, is anticipating oil prices are going to come down. But if they don't, and actually they start to go the other way, that's where airlines might be in a spot of bother come Q4. You know, so just be aware of that. But I want to go into areas where the market hates at the minute, and obviously airlines are one of them. The cruise liners are the others. Bookings are down. Apparently, consumers are reluctant to book far out in time. Their decisions are more short dated, which is going to force airlines into cutting their prices and profitability in the short term. That's why your share price is down here. So expect this to come, right? The thing is, though, when oil prices fall, you'll probably see a big change in consumer behavior, and they're probably going to book later into the future, because the word is the airlines are going to have to raise their prices to make up for the money they've lost during this period of time.
The one you see there, there's a nice little move in it up and down, is Alaska.
Yeah, that looking at it there, Michael. Well, I hope it's on your chart. Yeah. I like this for the long term. I think it'll be fine long term. And if you wanted to trade it, as you say, certainly trade it between where it is now up to pretty much just above 40, you know, maybe 42. You know, buy it at 38, sell it at 42, 10%.
I got into it at 39.
Oh, good stuff, Michael. Yeah, well done. Yeah, it's that now. It's at about 39 now today. So yeah, I think that'll go between 29, 40, 41, you know, in the short term, if you're looking at it from a trader's hat on.
Yeah.
Okay, guys. So look, I'm going to leave it there unless you have any other questions. I appreciate I'm as frustrated as anyone else want to get a trade on. But this is where the discipline really, really kicks in. You have to be disciplined here, because I'm telling you now, you can get caught on the wrong side of this very, very quickly. So my own opinion is just be patient and wait. And if that's another 2 or 3 weeks, so be it. It doesn't matter. You know, by the end of the year, you will have seen your gains, but you don't want to give away what you've made. And this is a real risky time for that as such. You know, there's a lot of complacency in the market. And remember, this rally is predicated on one sector predominantly. And if the rest don't start participating soon, I think the market tracks 3 to 5%. And that's when you want to pounce with your short puts, okay?
Your advice has put discipline into me.
Well, that's it. I think you need it. It's look, there's no fun in watching this happening and you're going, I should have a trade on, really. You know, like, let's call it for what it is. But, you know, this is record-breaking stuff we're achieving here at the minute. And by the way, I think we will be at 8,000. I said that all along. It will be at 8,000, you know. So, yeah, we will continue. But I do expect a pullback in the short term.
Okay.
Stephen, about that are you talking about Royalty Pharma?
Yes, that's the one. Yeah.
Yeah.
Fair play to you, Nick. Good man.
I was just looking at my list. That's why.
Yeah, this is the one we had flagged. Remember, a couple of years back, we had said we like this, and that it was, you know, what all they do is they're essentially, let's call it a hedge fund, and they basically buy patents on either medical devices or actually drugs, and they make their money out the patents. They get it wrong sometimes, they get it right. And we felt back here, you can see all our notes. We were kind of saying, actually, we actually like this here at these levels. But look, so it's nice to look back there. Fair play to you, Nick. Don't buy it now, though. It's too late.
No, no, I don't understand this yet, so I
Too
won't
late.
get
We
into it.
want your uranium stocks to do that now.
Yeah. Last question for the day, Stephen.
Yeah.
I've noticed that sometimes during the day, during the trading session, we do see a dip of about 1.5%, and then it just goes right back up again. So let's say we get a dip of about, just say today we get a dip of 1%. You won't go and put on a trade right now, right? You're going to wait for a few days for it to play out. Is that how it works?
Yeah, the short put strategy is a longer term like that. If you were day trading and watching your screen, yeah, like I made a lot of money when I started out. That's what I did. I day traded and I looked at patterns through the day, and you know, if I seen a predominant trend which is clearly up, market's giving away a bit, and it's generally there was a little bit more to it, but definitely it's something I traded and did myself and did quite a money. But I wouldn't apply it to the short put strategy. It doesn't make sense there because they're such short-term moves, you know.
So you wait for a few days of down, and then you'll confirm that okay, that's a good
Yeah,
trade.
I think you need to see 2 to 3% at a minimum down.
Okay.
I think it was back in February, like when there was quite a bit of volatility, and I was able to sit and watch do the short put strategy on the SPY. I did quite a bit of it during the month of, I think it was February.
Yeah.
When there was, you know, at a reasonably safe distance to where it was trading.
Yeah.
You know, where you were in it for a few hours or maybe in it for a day and get out.
Look, I'm going to be straight up with you guys. On my private spread betting account, I day trade the S&P 500. I don't put the trades out there because by the time I put them out there, the move is gone or it's too late, and then people don't understand it. You see the message and don't do it for 2 hours. For me, it's too risky to put that out there to you guys.
Yeah.
But I do spread bet the S&P 500, usually actually in the pre-market, to be honest with you. But I'm only trying to scalp 100 quid here or there. I'm not looking, you know, I'm not looking to make huge money out of it or anything like that. You know what I mean? It's tiny moves I'm looking for that I see when it gets to support level. So look, this basically works, right? I'm going to point you to a course. This works. This technical setup works. But I'm going to warn you now, don't use stop losses. It doesn't work with stop losses. Stop losses don't work when you're spread betting. The brokers are ruthless. They see your stop and they take you out, right? You have to watch the screen, okay? So I'm just letting you know now. But if you are looking for a day trade, there's your day trading blueprint of a course. The whole technical setup is there. What I look for and how I trade it. And I put rules in there, and I did put a mention, by the way, I'm being a hypocrite now because I did mention stop losses in there. But I'm telling you now, it doesn't work. You have to watch the screen, watch the move happen, and close it out. So if you want to day trade and you have the time to do it, please look at that course there, the day trading blueprint. I'm going to put it in the chat area now. But don't use stop losses. I can't stress that enough. They don't work. At least I don't think they work. Okay. Yeah. So that's gone in there to the chat area. So that's your technical setup, guys. I'll tell you the time frame on the chart, what you're looking for, and where's the entry point. And it's not an exact science, but it does work 70% of the time. And by the way, when I was doing it with stop losses, because I was putting it out there to you guys for a while, I just noticed we were getting ripped out all the time, and then the thing had rebound. So I couldn't put it out there. If I could put this out there with a stop loss, I'd be a lot more comfortable putting that trade out to you. But I can't, because I know the 30% of the time we lose, it's wiping out the gains we've made 70% of the time. So it's not worth doing. You have to watch it. That's been my experience, at least. Okay, guys, I'm going to leave it there. Thanks for tuning in. That was a great meeting. And thanks, by the way, for everybody who contributed and added their opinions on different stocks and everything. That's what this should be about. It really, really helps. Even your insights into specific sectors and everything, it's really helpful. So thanks for that. And don't worry, we will get a trade on, hopefully in the next week or so.
Yeah.
But just bear with me on this. We will get there. Okay.
Thanks again.
Thanks,
Thanks,
guys.
Stephen.
Thanks.
Thank
Thank
you.
Bye bye.
Bye-bye.
Bye bye.
Thank you.